This is a NOB software demo for entering in amortization schedules information. Okay, to enter in an amortization schedule, it's asking you for the item, which is a unique record ID in the amortization file. Just hit the enter key and get the next available item if you're creating a new one. Now, it's going to ask you for a fixed asset so that I can tie it in. If there is no fixed asset, you don't tie it in, that's fine. Same thing with the equipment item. It's trying to tie in something. If you have nothing to tie in it with, fine. If you do, put it in. I know we're going to work with equipment number 73. And the description, we're just going to make it a purchase. Now the group, what it's trying to do is when it comes to reconciling your balance sheet accounts, it's going to try to group this item. For instance, if you have 60 payments and you have an amortization schedule set up and you're trying to balance or reconcile your balance sheet accounts, each loan could have a line item in one GL accounting code, and you'd be able to summarize the information and keep track of the loan balances, beginning balance, current debits, current credits, and ending balance. So a group would be great. I'm just going to set it up by the default by hitting the enter key, and it's just going to be AM underscore and then the record ID 4, which will group this one amortization schedule within itself. Okay, the loan amount, $44,000. The interest rate on this loan is going to be 6%. And the number of payments is going to be 12 months, 5 years, 12 times 5, 60. The start accounting period will be this month, which is September 2020. And it enters in the rest of the information, the end period based on the number of payments, the pay amount based on the loan amount, interest rate, and number of payments, and then the total payments that you'll be making. So it looks like you're going to be paying $7,038.40 in interest and $44,000 in principal. So basically, the next thing you want to do is enter in the GL account information for processing interest portions of the payment. In other words, what you're going to do is basically every month you're going to set up an expense payable amount for the amount of $850.64 and apply it to the liability account for the loan. Make it simple for your people. This amortization schedule entry will then transfer the interest from the liability account and put it in the interest expense account for you. So now you have a monthly payment that can recur in the expenses, and you have a journal or a recurring journal that will transfer the interest out of the liability account and into the proper interest expense account. So basically what we want to do is enter in the GL account that we're going to use for the loan amount, the liability. And I'm just going to put equipment obligations. And it's going to bring up all the GL accounting codes that have the word equipment and obligations in there. And there you go, 2334*18. Now I'm going to take 100% of the interest and credit this account. Okay, so that's, I put a negative 100% debits, which moves it to the credit column. Okay, now what I want to do is enter in the interest expense account. Okay. And I'm going to take that total interest amount, 100% of it, and debit this account, whatever the amount is. Okay, now we're done. 100% debit, 100% credit. Okay, now we need to fill in the accounting period information for this loan. The easiest way to do that is to come up here to Options, Auto Calculation, Periods. We're going to auto calculate the accounting periods. There you go, all done. Okay, 60 lines, $44,000 in principal, $7,038.40 in interest, and you can see the balance just going down. Okay. Now I just hit the enter key and it brings up right record. Do you want to process this item? Yes. And we're done. That's it.